Well, Vinayak Chatterjee joins us now, and I'm going to take this conversation forward where the markets, and I'm talking about stock markets, they've been waiting, waiting, and Vinayak has been waiting with his hands on. But the private sector Capex is not starting. We all are waiting, and watching. Why is that?
Well, that's actually, it's strictly not true that private sector capex is not happening. Let me outline for you the sectors where robust private sector investment is happening. So I really don't know why you say that. Take the case of power. There is an uptick in investments by private sector in new greenfield as well as picking up distressed thermal coal assets and pumping more money into them. So thermal, renewable, transmission, distribution with smart meters, pumped storage, airports, Jewar, Navi Mumbai. These are all happening sectors. In social infra, if you see healthcare, real estate, and now the announcement of new industrial cities. If you see some marquee announcements, there have been the announcements on chips, on mobile manufacture, on batteries with Ambani's, on digital. There is a boom in data centers. And as I said, there's massive investments happening, announced on chips, mobiles, electronics, batteries, etc. So it's not fair to say that private capex is kind of in the wings. It is happening. Now the question is it happening with the levels that government expects? No, it is still the state that is doing the heavy lifting in infrastructure. And there is an added expectation that private sector will rise with even more investments in the manufacturing sector. But as I said, there is a fairly robust investment pipeline happening. And let me also tell you that there is a imminent pipeline, and what I call the imminent pipeline is very mega investments in ports. Vadhavan, Galathea Bay in Andamans. There are some 550 ropeway projects awaiting clearance with the subsidiary at NHAI. There are new railway lines and a massive expenditure on safety. And surprise of surprise, the boom sector is defense. You should actually, analyze the order book of defense companies and the two thrusts that India has now embarked on, which is to substitute imports for domestic manufacture and to push defense exports. So the defense sector is booming. So, but I've said what I had to. Over to you.
Why is that when we speak to, let's say, private companies, there's a gentleman from Macquarie on the show just a while ago, evidence of capacity utilization. I'm talking about the private companies here. That is still looking very somber. It is encouraging, but it is not great. So the point is, if Indian economy is doing so well, if foreign flows are so well, if foreign capital is available on demand, on tap, by now this annual split should have translated into some real numbers. That is what I think we're debating and deliberating. Is it better? Of course it is better, but is it great? Maybe the great is not the right word.
We are always looking at the traditional sectors adding to factories and their capacities. What you're seeing is non-traditional sectors kicking in with capex. Just focus on, out of the three booming sectors, power is traditional, but elements of power are new, like green and pump storage and batteries. Focus on healthcare and defense. These two sectors are seeing a boom in investments. What is happening is traditionally post-COVID, remember that private consumption by all economic measures has been muted. And therefore, even post-COVID, most established FMCG, durables players, etc., and you're seeing that suddenly in automobiles now, the build-up in stocks, private consumption has been muted. So traditional industries are still the ones that already had installed plant and machinery are still to hit that trigger when the boards unanimously say, let's build new factories. So that is not happening in the sectors which are already invested and traditional. But a huge amount of capex is coming in the opening up of new sectors. And I'm particularly mentioning green energy, defense, and healthcare. Over to you.
Green energy, semiconductor, to some large extent power. These are the three sectors which you spoke about? I'm just writing it down.
I spoke about power, largely with a focus on coal, thermal and green, defense and healthcare.
Okay. Now let's substitute these new sectors with the traditional sectors, which is that roads, bridges, new factory, old, traditional way in which how private sector was spending. Can these new sectors, on a sum total basis, the investment in these new sectors could be more than the traditional sectors?
No. So that is where, now let me say where I agree with you now. Just take one statistic.
Finally, we agree on something. It's ready to get convinced Vinayak on something. But today's my good day. I've convinced you on something.
Okay, no, I'll tell you where I agree with you. That the growth of these new emergent sectors are not sufficient in the size of India's economy to make for a major overall uptick in private investment. So I agree with you. And just take a look at one figure. Between FY19 and FY23, which is COVID plus years, the share of private non-financial corporations in overall gross fixed capital formation increased marginally from 34.1% to 34.9%. So your observation is correct. The increase in private sector capex from 34.1 to 34.9 is hardly worth going to town about. But the fact is that even that this increase has happened because of the sudden emergence of non-traditional sectors, which has at least led to some degree of positivism. Whereas the traditional sectors are still to reach their kind of exceed their existing capacities. But that's the story. That's the storyline. But we should celebrate the emergence of fantastic new areas that are opening up. And I think all analysts in Bombay should focus on companies that are in the defense business, defense, healthcare, power. Very clear. And real estate, of course. It's across India's towns and cities. Buildings are coming up, real estate is moving. But back to you.
Such a great point. You preempted my next question, which is that what should stock markets focus on?
I knew you'd ask that, so I kept my answer ready. I knew you would end by saying, so Vinayak, tell me, what stocks should our investors look at?
Okay, so I think we know each other. But my next question is perhaps based on what you also flagged off right now, which is that new sectors are taking over, old sectors or traditional sectors are taking a backseat. But the analyst in Bombay also focuses on two big sectors, which is steel and cement. Yeah. Now, if the new sectors are taking over, old sectors from a private sector Capex standpoint, they could take a backseat. So do you think indirectly it could have impact on steel and cement demand also, which should grow ideally when the economy is booming, but which may not grow because of new Capex?
Now, unfortunately, I have to agree with you again.
My lucky day. It's on record. 10th of September.
So the point is that if you see the cement industry growth, which is probably the bellwether of determining infrastructure spend or traditional industry spend or building factories, etc. What is the cement sector growth in real terms? I mean, it is 7, 8, 9%, right? With the same pace as the growth of GDP. In fact, nominal GDP is growing at 12%, but the cement sector is even less than nominal GDP growth. Am I right? So therefore, it substantiates the hypothesis that we are seeing a structural change in the Indian economy, structural change in investment patterns, where new sectors are emerging. Old sectors are growing at a far lesser space in terms of capex, but the new sectors are not large enough to dominate the overall capex story. That's really the summary of our discussions today.
Isha is saying that she wants to come in. She said enough of you and Vinayak agreeing and disagreeing. She wants to take over.
No, I'll just take forward the repertoire that you guys are sharing and wanted to ask you, Vinayak, the question that you were anticipating already. With stocks that our investors in Mumbai should look at perhaps, which stand to benefit the most. And I ask you that because the way you're pointing out, it seems like it's the newer sectors and newer segments which are really leading the growth here.
Correct. So three suggestions. Anything to do with traditional and non-traditional power. The companies that are in coal thermal are going to see boom times because there's going to be a demand-supply imbalance in favor of producers. So anything to do with the power sector and renewables, green, of course, is in boom times on investment. So anything to do with the power sector, switchgear, transformers, cables, solar modules. So power sector stocks are going to see fair tailwinds. Defense, an under-investigated sector. Please ask your own analysts and other analysts in Bombay and your investors to take a hard look at the order books of companies like Mahindra, like Bharat Forge, and many others who are heavily invested and benefiting from the government's major push on indigenization of defense production, both import substitution and exports. And finally, healthcare. The acute shortage of good public healthcare is very clearly leading to a shift of popular movement from public healthcare facilities to private, and that is playing out across India. So the companies which are listed, take a hard look, and I would recommend healthcare stocks across the board. Over to you.
Okay, not going to get into a debate, and maybe, I'll keep it a very safe-ish sort of question. But given the fact that, there has been talk, maybe it's a little bit broad with respect to green energy, etc. How do you see that really shaping up, given that we have seen quite a few companies as well talk about this?
Look, green energy, the story about large capacities being created in green energy is well known. Various companies are implementing massive projects across the country on green. So far as green is concerned, the discourse has actually changed to 24/7 green power, which means the conversations are now about storage. And in storage, you broadly have two sectors: pump storage projects, which are proliferating, and battery storage. And the biggest announcement there has been Reliance's announcement that they have won the PLI scheme of the government to set up 10 gigawatt hours, huge capacity in batteries. So the story in renewables is well known about new capacity, but the story is shifting to storage. And that is where the attention should go now.
Just last quick question, because we talked about green energy and there is this increased clamor in the stock markets right now that the next set of NPAs or next set of bubble perhaps could come in from some of these solar module and wafer manufacturers, because they've put up large capacities expecting the boom to happen and a lot of export orders to come by. But at some point of time, there could be a situation of supply glut and an oversupply kind of situation. What's your take on that?
It's too early to cry wolf. I think there is a massive demand of solar modules in India and surrounding countries, and export orders from the US because of their disinterest or disenchantment with China. Indian solar manufacturers are often getting a better price for exports to the US than they're even getting in the domestic market. So it's not the right time to cry wolf on the negative predicament of solar manufacturers in India.
Too early, but important to track. That's the sage advice coming in from Vinayak. Thanks as always for making time and speaking with us. Always a pleasure indeed.
Thank you very much.